Could the two biggest Musk companies merge into one, and what would a $3 trillion empire mean for your portfolio? This is the Financial Brief. SpaceX is expected to start trading on the Nasdaq in just over 2 weeks, after obtaining a private market valuation of $1.25 trillion. Tesla's market cap currently sits around $1.6 trillion. And now, chatter is building that Musk's ultimate goal is to fold both companies together into a single entity. People familiar with the talks say Musk has discussed the possibility with colleagues. A current Tesla employee told CNBC that many workers at the EV company have long expected such a transaction and that the topic is openly discussed internally. Here's what matters for investors. The two companies already share resources across power systems, compute infrastructure, and engineering talent. A merger would create a conglomerate spanning electric vehicles, rockets, satellite internet, and artificial intelligence, easily one of the most valuable companies on Earth. But it would also raise enormous regulatory questions. Antitrust scrutiny, shareholder dilution concerns, and the sheer complexity of combining a defense contractor with a consumer automaker are just a few of the hurdles. For Tesla shareholders, this is a story to watch closely. Any formal merger proposal would likely trigger massive volatility in Tesla's stock. And with SpaceX's IPO now just weeks away, the timeline for this speculation to either materialize or die down is short. The next month will be critical. Turning to energy markets, the Strait of Hormuz remains effectively closed, and one major Wall Street firm doesn't see that changing anytime soon. Piper Sandler analysts say they have very little confidence that commercial traffic through the strait will return to even 50% of pre-crisis levels for months ahead. That's a significant call because roughly 20% of the world's oil supply passes through that narrow channel between Iran and Oman. The situation escalated over the long weekend. The US military confirmed it conducted self-defense strikes in southern Iran, targeting missile launch sites and vessels placing mines around the strait. President Trump said Saturday that a deal with Iran has been largely negotiated. But Iran's foreign ministry pushed back, warning that navigation through the channel will have costs. So, what does this mean for your wallet? Oil prices bounced back on Tuesday after falling over the long weekend, whipsawed by mixed signals on a possible deal. But if the strait stays closed through the summer, energy analysts expect crude to hit new highs, which would feed directly into gasoline prices, shipping costs, and broader inflation readings. For investors, energy stocks and oil-linked ETFs have already rallied hard this year. The question now is whether the geopolitical premium is fully priced in, or whether there's more upside if the blockade drags on. Watch for any concrete deal announcements in the coming days, because each headline is moving crude by several percentage points. And here's what you need to know heading into the rest of the week. Gold is at a crossroads. On Tuesday, gold miners rallied more than 4%, even as gold futures dropped on the session. Options traders are placing aggressive bets on both sides. Bullish call volumes in the VanEck Gold Miners ETF outpaced puts more than 5-1 at one point during the day, with heavy buying in June calls that would need double-digit rallies to break even. But not everyone's convinced. One large trader spent more than $1 million buying downside puts expiring in July, betting the rally fizzles. The tension in the options pit reflects a broader macro question. Gold has been under pressure for months, weighed down by a stronger dollar and rising real yields. But if the Strait of Hormuz stays closed and inflation expectations climb, gold could catch a safe haven bid that reverses the trend. Beyond gold, here's your calendar. Markets will be digesting more data on consumer confidence and housing this week. And with SpaceX's IPO approaching fast, any new details on listing terms or Musk's plans could ripple across related names. The broader theme this week is uncertainty, from the Middle East to merger speculation to mixed signals in commodities. In that kind of environment, positioning matters more than prediction. Keep your eyes on oil inventories, gold's technical levels, and any Iran deal developments. They'll set the tone for June. Volatility creates opportunity. Subscribe to stay informed. This has been the Financial Brief.